Have you ever looked at a company's financial headlines and wondered, okay, that's the big number, but what's the real story here?
Yeah, it's often just the tip of the iceberg, isn't it?
Exactly. And beneath the surface, there's this whole world of, you know, strategic moves, operational wins, maybe some hidden challenges that really explain what's going on. So today, that's what we're doing, a deep dive into Vedanta Limited's Q1 FY26 financial performance. And we're not just skimming. We've gone through their official press releases, the investor presentation, even the detailed financials they filed. Our mission for you listening in is basically to boil all of that down to the most important bits.
Precisely. We want to get past just, listing figures. The goal is to understand the why behind them. How did these details connect to the bigger picture, to Vedanta's strategy? So you get that full understanding, but without, drowning in data.
Right, sort of a shortcut to being really informed. Maybe find a few aha moments too. Okay, let's unpack this then. Where do we start pulling back the curtain on Vedanta's performance?
Yeah.
Let's hit the main numbers first, yeah? So looking at the headline figures, consolidated revenue came in at 37,444 crore. That's a solid 6% increase year over year. But the thing that really jumped out, for me anyway, was their record first quarter EBITDA earnings before interest, tax, depreciation, and amortization. That hit 10,746 crore, up 5% year over year. And profit-wise, their adjusted profit after tax saw a pretty big jump, 13% year over year, reaching 5,000 crore. The reported PPAT was a bit lower, 4,457 crore. Still impressive top-line stuff.
Yeah, definitely strong numbers. And what's fascinating, I think, is how they got there. That EBITDA margin, if you exclude copper, expanded to 35%. Now, that's not just good.
Right?
It's their highest margin in, the last 13 quarters?
Wow. God.
Yeah. And that expansion, it really shows their efficiencies improving, getting more profit from their revenue, crucial in commodities.
Suggests they've got a tight grip on costs.
Exactly. And we also saw a strong return on capital employed, ROCE. That's key for how well they use their money. It was 25%, and it improved by 87 basis points. That's 0.87 percentage points compared to last year. And looking at their financial health, net debt is at 58,220 crore. That gives them a net debt to EBITDA ratio of 1.3x.
Which is pretty manageable, right? Like 1.3 years of earnings to cover net debt.
Generally, yes. A lower ratio like that usually points to a healthier balance sheet, makes managing debt easier. Oh, and it's worth mentioning, CRISIL and ICRA both reaffirmed their credit rating at AA.
And that matters because...
Well, it signals stability, trustworthiness to the market, makes it potentially easier, maybe cheaper, for Vedanta to get funding down the line for, growth plans.
Gotcha. And what about shareholders? Anything for them directly?
Well, yeah. They declared an interim dividend, €7 per share, for this financial year, back on June 18th. Plus, they made what looks like a smart move selling a small stake, 1.6%, in Hindustan Zinc.
Right, the HCL stake sale. Yeah, that brought in 3,028 crore in cash. And that cash helped boost their liquidity significantly, up 7% from the previous quarter and a big 33% year over year. Their cash and cash equivalents reached 22,137 crore. So not just profit, but strong cash flow too.
Good point. Cash is king, after all.
Okay, so impressive financials. But like we said, the real story is often in the how. Let's shift gears and look at the engine room, the operations, segment by segment. This is where it gets really interesting, I think.
Absolutely. Let's dive in. Starting with aluminum, stellar performance here. Record alumina production, 587 kilotons. That's up 9% year over year, and a huge 36% quarter over quarter.
36% quarter over quarter. That's massive.
It is. Cast metal production was also solid at 605 kilotons. But here's the kicker. Their hot metal cost, excluding alumina, hit $888 per ton. That's the lowest it's been in 16 quarters, 4 years.
Wow, so that cost focus is really paying off.
It seems so. And aluminum, being a low-cost producer, is, everything. It positions them really strongly, even if the market dips.
Okay, strong showing in aluminum. How did zinc do? Both India and international.
Good question. Zinc India also had a phenomenal quarter. Highest ever Q1 mine metal production, 265 kilotons, up 1% year over year, which is still growth. And again, costs. Lowest Q1 cost for HZL, Hindustan Zinc Limited at $1,010 per ton. That's down 9% year over year.
Seeing a pattern here with the costs.
Definitely a theme. And then Zinc International, even more dramatic. Mine metal production surged 50% year over year.
50%.
And 12% quarter over quarter, hitting 57 kilotons. Their overall cost of production dropped 21% year over year to $1,269 per ton. A big part of that was Gamsberg. Its Q1 production jumped an incredible 74% year over year. Shows that mine is really ramping up.
Okay, so zinc is firing on all cylinders, too. What about oil and gas?
Oil and gas production was 93.2 thousand barrels of oil equivalent per day. Now, you get natural decline in older fields, right? But they seem to be offsetting that pretty well with new infill wells. Smart strategy for mature assets. And again, cost OPEX was down 11% quarter over quarter. They mentioned optimizing polymer injection chemicals, basically smarter spending on day-to-day ops.
Right. Makes sense. And the other metals, iron ore, steel, copper.
Yeah, moving to iron ore, steel, and copper. Saleable iron ore production up a big 42% year over year to 1.8 million tons. Pig iron production hit its highest ever for a Q1 213 kilotons, up 4% both year over year and quarter over quarter. Ferrochrome also hit a record high 28 kilotons, up 3% year over year, but get this, 150% quarter over quarter.
Whoa, 150%.
Huge jump. And copper cathode production bounced back strongly, up 119% year over year to 44 kilotons. Shows a good recovery or ramp up there.
Okay. And finally, power.
Power. Total power sales increased 33% quarter over quarter. They've been busy commissioning new capacity, too. Added 950 milliwatt of merchant power capacity so far this financial year. That takes their total merchant capacity to 3.83 gigawatts. And just after the quarter ended, in July, they commissioned Meenakshi Unit 3, 350 milliW, and Athena Power Unit 1, 600 milliW.
So more power coming online.
Exactly. So across the board, you see this push for more production, but crucially, driving down costs. And those operational efficiencies, especially the cost cuts, they feed directly into those strong financial numbers we started with. It looks like a well-oiled machine right now.
It certainly sounds like it. Lots of focus on efficiency and expansion.
Sure.
So beyond these quarterly results, what's the bigger strategic picture? Any major corporate stuff or, external things we should keep in mind for Vedanta's health?
Yeah, this brings up some important points, particularly around debt and that ongoing restructuring. Let's start with debt management. Gross debt is about 80,357 crore as of June end. Net debt, as we said, of 58,220 crore. But what's really key here is the cost of that debt. It's come down by about 130 basis points year over year, now sitting at 9.2%.
So borrowing is getting cheaper for them.
Relatively speaking, yes. They also issued 5,000 crore in NCDs, non-convertible debentures, basically borrowing directly from investors, plus other refinancing. Shows they're actively managing their debt profile. And importantly for bondholders, they maintain strong asset cover for their secured NCDs, over 125% and 110%. Adds a layer of security.
Okay, so proactive on debt. What about this big demerger plan? Sounds complicated.
It is, the demerger and restructuring plan. The board approved it back in September 2023, the idea being to split various businesses into separate listed companies. Unlock value, essentially. There was an updated scheme in December 2024, which notably kept the base metals business within the main company. It wasn't demerged. Now, it's facing some legal hurdles. You mentioned complexity. There's a recent stay from the NCLA, the appellate tribunal, related to the Talwandi Sabo Power Limited part of the scheme.
Right.
These things aren't unusual in massive restructurings like this, but they do add uncertainty about the timeline and the final shape of things. The next hearings are set for August 2025, so it's definitely an evolving situation.
A lot of moving parts indeed. And wasn't there a long-running dispute with the government about oil profits? Any movement there?
Yes, the arbitration with the government of India, it's about profit sharing from the Rajasthan oil block, goes way back. There was a significant development recently. The Delhi High Court on July 11th dismissed the government's appeal against an earlier arbitration award that had actually favored Vedanta.
So a win for Vedanta.
On that specific legal challenge, yes, it's positive. However, the government still claims Vedanta owes about US $224 million based on their calculations.
Wow.
Vedanta disputes this amount. So this quantum issue, how much money, if any, is actually involved, that's still before the arbitration tribunal. So one hurdle cleared, but the final financial outcome isn't settled yet.
Okay, still something to watch. And what about those short seller allegations mentioned in the auditor's report?
Right, the short seller allegations. This happened after the quarter ended. Reports came out making certain claims against the group. Now, crucially, management's assessment, as stated in the report, is that these allegations are baseless. They say the transactions were legitimate, approved, complied with laws, etc. And importantly, they state there are no implications to the consolidated financial results for Q1 or any prior periods.
But these things can still make markets nervous, right?
They absolutely can, even if ultimately unfounded. What we see here is the company tackling it head-on in their official communications, trying to reassure investors about their financials and how they operate.
Okay, so managing operations, finances, legal issues, but also ESG. Environmental, social governance. That's huge now. What are they doing there?
Yeah, it's definitely a focus. Their commitment to ESG leadership seems pretty strong, and they've got external validation. They were recognized in the S&P Global Sustainability Yearbook for 2025. Hindustan Zinc ranked in the top 1% globally for ESG performance. That's significant.
Top 1% globally. Wow.
And Vedanta Ltd and Vedanta Aluminium were also named Sustainability Yearbook members, so strong industry nods there. On the East Environmental, they have nearly 2,000 milliBU of renewable energy agreements in place, used about 0.84 billion units of RE in Q1. Waste and water management numbers look decent too. 72% utilization of that HVLT waste, 48% water recycling. Tangible stuff.
Reducing their footprint.
Trying to, yes. And tree planting, they planted over 500,000 trees in Q1. They're apparently halfway to their 2030 target of 7 million trees already.
That's quite ambitious.
It is. On the S, social gender diversity is up slightly to 22% from 20% last year, a positive trend. And their CSR spending was 94 crore in Q1. They say it impacted over 2 million lives through health, education, skilling programs. A notable project is the Nangars, over 8,600 of these centers for women and child welfare.
That's like significant community investment.
Yeah, and they list a bunch of awards, too, across CSR, safety, sustainability. It shows they're dedicating resources beyond just the core business.
So after all this strong ops, strategic moves, ESG focus, what's the outlook? What's management saying about the road ahead? Where are they heading?
Well, the commentary from leadership sounds pretty confident, pretty bullish, actually. Mr. Anil Agarwal, the chairman, called Q1 a strong foundation for the year ahead. He highlighted that highest ever Q1 EBITDA. He specifically said the Lanjagar refinery ramp-up is on track to achieve 3 MMT record volume in FY26, so pointing to more production growth. He also mentioned new capacity coming online in Q2 Train 2 at Lanjagar, more smelter capacity at Balco, new thermal power, saying this will help them deliver our full-year guidance. And looking even further, he mentioned starting operations at the Sijamali bauxite mine and Kurilewi coal mine in the second half of the year.
More raw material integration.
Exactly, which he thinks is likely to boost our performance to a record high. So very optimistic language there.
And the CFO singing from the same hymn sheet.
Pretty much. Mr. Ajay Goel, the CFO, also flagged the record Q1 EBITDA and that expanded margin highest in 13 quarters. He directly linked the strong performance, plus things like the HCL stake sale cash, to achieving that healthy 1.3x net debt to EBITDA ratio. And he wrapped up by saying the reaffirmed AA credit rating shows financial strength and market confidence in Vedanta's growth story.
Confidence seems to be the key word.
It does, and they backed it up with some specific FY26 guidance points. Clear targets, like alumina production aiming for 3.0-3.1 million tons, aluminum at 2.5-2.6 million tons, zinc India mine metal around 11,115-1,135 kilotons, oil and gas aiming for 95-100,000 barrels equivalent per day.
So clear targets set. Not just resting on Q1 laurels.
Doesn't look like it. They have a plan for sustained growth, it seems.
Okay, so wrapping it all up, Vedanta's Q1 FY26 really shows a company pushing hard on growth through operational efficiency, managing its debt smartly, and making visible progress on ESG, and doing all this while juggling some pretty complex corporate restructuring and, those ongoing regulatory things.
Yeah, it's a complex picture, but the core message seems to be one of focused strategy and strong execution in the quarter. And maybe a final thought for you listening. Consider how a company like Vedanta has to balance these really ambitious growth targets with all the intricate governance challenges, the demerger, the arbitrations. That balancing act, navigating both internal complexity and external pressures, that's often where the real long-term story unfolds.
Definitely something to think about. What stands out to you from this deep dive?